Gabriella, let me start with you. It was a difficult first half of the year, but this past quarter has been an incredibly strong one. Where do you think the momentum is, at least as we head into the second half?
Indeed, quite a first half of the year. Worst first quarter in a decade, best second quarter in a decade as well. I think the conversations we've been having with clients, the first is to realize we are in a much better place right now than we were at the end of last quarter. We've started the recovery with two strong months here of the recovery in data for May and June. And we also have a lot of policy support on both the monetary and the fiscal side. So the conversations we've been having is to start to take a bit more risk in the portfolio, being a bit overweight equities versus bonds, starting to think about cyclical sectors and regions within equities, starting to think more about corporate credit on the bond side. But at the same time, we're also thinking about the second half is not going to be easy. So we want to avoid the extreme of going too overweight risk. So the reopening has started, the recovery has started, but it's not the end of the COVID story, and there are going to be plenty of potholes along the road. So we still want to be selective, thinking about the companies that will survive 2020. And we also still want to have some protection in the portfolio for the potholes ahead. So it's avoiding extremes in the second half of the year.
Hey, Dion, Gabriella's right. It's the policy reaction that the market has watched and kind of taken such careful note of. And we are going to be hearing from both Mnuchin, Treasury Secretary Mnuchin, and from Fed Chair Jay Powell today. They'll be speaking to Congress about what they're seeing. You can bet that they're going to be saying that it's not necessarily an easy road, but do you think that the government, both from the fiscal and the monetary side, are going to be here to back things up, even if cases continue to increase and we see some rollbacks of the recent economic reopenings that we've seen?
Yeah, well, look, you look at some of the recent polling data. President Trump is starting to trail right now in some of the betting markets. Republicans in the Senate are starting to look a little rough. And right now, that's really got to put a little fire in their pants to get some new stimulus measures packed up. The $600 extra unemployment benefits, as well as the extra benefits for pandemic unemployment assistance, those are going to expire at the end of July. You're having a lot of moratoriums on rent and mortgages. Those are starting to expire. So there definitely is going to be a big fire lit under legislators to get some new stimulus out the door, get money back in folks' pockets, whether that's more unemployment insurance, programs for small businesses. And this program for large businesses really hasn't even been touched because the Fed has opened up the credit market so much that, folks can just go borrow out there in the market. Over $1 trillion borrowed already, the largest amount that we've seen on record. So certainly on the fiscal side, we expect to see more. I think the whole market is expecting to see a big fiscal package. The big question, though, comes about the Fed. What are we going to see on the monetary side? Because what they've done so far has done wonders for the credit markets and for financial assets. For real people, though, for their business contacts, you haven't really seen that come through. So does the Fed start to pause and say, hey, have our actions had the desired effect, or do they say, we've got to keep the markets flowing, we're going to double down? And I think when you look at the market action yesterday, and just in general, when we see bad news on this economic data, the market seems to believe the Fed is just going to jump back in, QE Infinity 2, QE Forever Part 2, whatever it is, maybe doubling down on their corporate credit facilities, one they just opened up yesterday. So I think there's an expectation that more is coming if things get worse.